You're watching Master Trader Live, simple market analysis and education to help you make money in the markets. Join us live each week on YouTube and see past episodes at Master Trader Live. And now your show hosts, Greg Capra and Dan Gibby.
Welcome back, everybody. Today we're going to be talking about continuation patterns. They come in different flavors. This is one that we've used for many, many years. I think more actively recently. Continuation patterns, more erratic type of patterns have been more of the flavor of the day. But from the past, I could talk from my past starting out, everything was about pullbacks and breakouts. And this goes back about 30 years. And as computers became more adept to trading, technology improved, the typical patterns became more well-known. They still work today. There are certain things that don't change, but market environments change. Like this one right now, the last week or two has been very erratic, kind of running in place. But when prices are start to move, and there is greater demand and a move up than supply, things move rapidly and they don't pull back. So, it's where you really have strong moves. And so years ago, where everything was either, buying a pullback or buying a breakout, and even back then as things evolved, I was like, damn, no pullback, no breakout. How the hell do you participate in this? And continuation patterns became something of a focus. How do I get on board? We're pattern traders, which means we look at pictures that communicate to us what to do. Our price is going up, down, or sideways. You've heard us, if you've been here for any amount of time, you've heard us use the term tradable void, which means there's no support or resistance to the left, and that suggests that prices can trend. So each individual concept builds on itself to form a strategy that allows us to have a bias or a belief about what the future holds. So if we believe that there is a high probability that prices can move a relatively large amount before they reach some targeted area, how do we get on board? Well, if there are many participants, including computers that just are buying based on their algorithms, you need continuation patterns. And so they come in different flavors. And this one here is one Dan coined about 20 some odd years ago. I thought he was just hungry, but it's a very good pattern as a continuation pattern. One of the things, I don't know if Dan prepares the slide, so I don't know if we have this, Dan, but we can talk about it, is that everything is based on prices moving up and down in some way, or retracements. So depending on how they move up and down, you can get a different kind of a continuation pattern or picture. So maybe we can talk a little bit about understanding that. But whether it's how it moves up and down, in addition to whatever the flavor of the day is, so to speak, is how individuals are trading, you can get different patterns. So we'll take a look at that and try to share with you as much as we possibly can within the hour. All right.
All right. Good afternoon, everyone. Yeah, Greg, remember when we were in the deli in New York and I went in there and ordered a bull sandwich and they about kicked me out. I'm like, all right, forget it. We're traders. All right, here we go. Here's a slide. It's foundational for Master Trader, so it'll be review for many of you. This is our approach to the market. Whether you're a doctor, basketball player, trader, okay, how do I do it? How do I consistently pull money out of the markets? This is our approach of how to do that. Price is king. Marcelo just said, no pattern, no trade. Exactly correct. That's the starting point. I have a beautiful pattern. And as Greg said, this sandwich is a continuation pattern. And with all patterns, you don't just trade them because they have different qualities based upon the other concepts of our approach, which is, okay, where is that picture in the trend? Multiple time frame analysis. Does it have the price void Greg mentioned, or is it in the middle of a big mess and there's nowhere for it to go? Volume we look at as secondary. We had an MT Live recently on that. We traded DKS this morning. Amazing volume. Just supported that bullish gap reversal this morning. We're obviously akin to what are the broader markets doing. That's going to help determine if we can continue our bias with the trend or if we're near a turning point based on the patterns and market internals. When obviously, Greg says, hey, wait a minute, this has to be the first one. Position and money management is key to anything. I mean, Greg, you have all these great analogies. You open up a mechanic shop and, you need a budget, you need funding, and, you got to stay in business. So
How much
Greg,
money am I going to allocate to this, and this to spread it around to take advantage of different opportunities? And that's the essence of what we do in the market.
with a keen focus on risk management, which is connected with money management. So these are all just the setup. So this is the first bullet on the prior slide. And then, as I said, we take this setup and overlay the other concepts. But we're simple red and green candlesticks with a couple moving averages, color-coded volume, and then we make our determinations based upon the supply and demand imbalance and having a bias on the time frame that you're trading. So every one of these 9 pictures are what we call bullish money patterns. Every one of them is suggesting higher demand, bullish continuation higher with different pictures. And so you might say, well, so Dan, where's my sandwich? You're giving me 9 of them. Where's my sandwich? Well, you're going to see in a moment, it's a derivative of this. And I'll just show you on the next slide. But Greg, I love this one. Greg made this slide years ago. And, the textbooks have all these fancy names and crazy oscillators and everything else. And Greg says, look, call it a flying dinosaur if you want. I don't care. But the message of this 3-bar turn is it's going up. It's a bullish turn.
And so it's really, look, these patterns are based on some level of a pullback. So when we think about pullbacks, the way we did it years ago was just simply, prices would trend and the whole story about what was resistance becomes support. And maybe prices would pull back like this in multiple bars, 4 or 5 or 6, whatever it is. It would pull back into this area. And then we'd get some kind of a pattern and we would buy it, above the high, and up it would go. And you'd get higher highs and higher lows. Well, as things evolved, all of a sudden you had situations where it was like, what the hell was that? And it was, off to the races. Or it did something like this and off to the races. Sometimes it could have been, where it was going up and say, well, that's not really a real breakout. Well, really? It's going up. You want to argue with that? Or this pulled back, and we call in the course the transition from red to green, or a red bar ignored, meaning in some smaller time frame, it went down and it went back up, right? In some smaller time frame, it did this. Some little micro time frame. That's understanding multiple time frames. Where here it went down and it went up, and so on. So as we get into this sandwich concept, which is kind of this, the way it is, Dan, not exactly, because we want larger bars, but that's the essence of the idea, which we'll look at those, but everything is about somehow this one made a little dip, the 1, 2, 3 continuation pattern. And of course, this was a larger one, but everything is about pulling back. And how bullish are traders? I mean, if they're crazy bullish, it won't even pull back. If they're a little apprehensive, well, it maybe pull back on one bar and flip back up again. Or in a more erratic market environment, it may do this, where it just flips back and forth. So as you learn these price patterns and what we call bar by bar analysis, you're able to understand what's happening in the moment. And it's like, as Dan said, you could call it a dinosaur, Dan, you said?
Flying dinosaur.
Flying dinosaur or whatever. Dan coined sandwiches. We were hungry that day. But the idea is some kind of picture, it went down and it came back up again.
So just continue, because that's exactly what you're talking about right here. And then here's sandwich.
Right. So when it says 1 candle, 2 candle, 3 candle, well, how the hell does that happen? Well, maybe you're looking at a 15-minute chart. Someone else is looking at a 10-minute chart, or someone else will look at a 5-minute chart. Right? And so depending on the time frame you're looking at, provides you a picture. Now, you can get caught up in candlestick guru names and saying, well, it didn't form the haram eye with the dark cloud cover around it. All right, call it what you want. It says it's going up. And so the understanding of this is, if I see any of these pictures within the context of the other concepts, is it going up, down, or sideways? Is there a tradable void? What time of day it is? What's the broader market doing, and all of that? Any one of them can tell me, press the button above these highs. Right? And even if I'm using one time frame, right, whether it's a 5 or a 15 or a 30-minute, any time frame can form any one of these pictures at any given time. The takeaway here is that you understand what they mean.
And Greg, it's so funny. You always have these little Capra-isms. But our approach right here, you just said, it's telling me to press the button. And isn't that what our approach does? We have an objective, systematic approach that tells us when to press the button. And press the button means to enter the trade based upon your high probability bias, based upon your approach that you trust and rely on. That's what pressing the button means. And when we don't have that confidence in the trade, then we're sidelined waiting for more information. So that's why I said the sandwich is a derivative of this. Now this is a 180 reversal. So what's interesting about the sandwich today is because this was a bear 180 reversal. So after these 2 bars, and it's important in this setup that these are wide range bars, because there's an element of shock. So the bulls are very happy at the end of this bar. It's a wide range bar closing at the high. 100% negated. So now the bulls are not happy and the bears are in control. Well, the very next bar, it's like you're getting banged around. So the very next bar is the opposite. Now the bears are not happy and the bulls are back happy. So this has it's a double 180 shock. And with all of our patterns, as you'll see, we got many examples, like any MT Live. I could give you hundreds of examples, and we just give you as many as we can in the hour allotted for these. But this now is a bullish pattern negating a big fat red bar. Let's now look at a bunch of pictures.
So Dan, let me just, so someone might be thinking, well, how do I know not to sell the red bar? because the red bar is bearish. And I read this candlestick book, and that's a bearish bar, like an engulfing thing of some kind.
Well, you don't even need a textbook. We say it right here that it's, I mean, you're talking the flip, but yeah, we love 180 reversals, but you have to apply the other concepts. But continue.
So you just simply ignore the red bar to an extent to say, look, my other concepts are that this is in an uptrend. So I discount, if you will, the red bars because they're supposed to have no follow through or be ignored. Now, I don't know what'll happen. Now, at times in some crazy situations, this may just, go down like that. It can happen, it's in an uptrend, things happen. The thing is, that's not your money. It's not your trade. It's not an extended pattern where maybe the moving average is over here and prices are way up here. So you wouldn't be thinking to sell. You're just waiting for your pitch, if you will. You're waiting for your pattern. So when you see this bar, the next thought should be, hey, I should get some kind of confirmation to the big picture. Maybe it'll be a big green bar. Maybe if it dips down, if it does dip down, it'll come right back up again and be a bottoming tail bar. So you see where we're going here with this bar by bar? We're focused on a particular one today so you recognize that and have that in your mind as a recognizable pattern. But
just for
the other side was, hey, here's all these other patterns. We're just adding another flavor to your pictures.
Absolutely. It's number 10 on the slide. All right. So just for definitions, folks, to get it in your head, because I get it both ways. This is a bullish pattern. So damn, why are you calling it a bear sandwich then?
That's right.
Well, and Pat, who was in our trading room, we love her. She's like, hello, Dan McFly. When you go to the deli and you order a chicken sandwich, what is in the middle? Chicken. Okay. So the bear is in the middle of the sandwich, Dan. And I'm like, all right. I give, you're right. So the bear, this is a bear sandwich. If this is opposite, which I'm going to show you, it's a bull sandwich. So just think of it, this is in the category of a bear trap, right? A bear trap is a bullish setup. And this is just a flavor of a bear trap. The bear's in this middle bar trapped over the high, it's a bullish pattern. Rest of the presentation, let's look at pictures and they'll sink in. So here's my definition now that we just showed you on the prior slide, but you have two, they have to, here's a little negative bar, which means bearish, right? So the bull sandwich, the green is the bull, he's in the middle of the sandwich. They have to be wide range bars, not little bars, They have to be big bars. And then it's a big green bar sandwich, 2 pieces of bread, two pieces of big red bread. That's a bull sandwich.
Like a hoagie.
Go to the other slide, call it what you want. And so is a major theme throughout this, the rest of these sandwiches are a price void because they're continuation patterns. Most of the time, sure, it could happen igniting, but most of the time they're continuation. So look, this was the cues. Look, this is Greg. It's approaching the end of May right now. Go back and look at April and see how far we have fallen from this pattern. The cues right now are at 288. They have fallen 50 points, Greg, from this pattern right here. This pattern, they've fallen 50 points. So you might have been saying, now look, here was a 180 reversal right here that was on our picture of 9 slides. So, and then it had a big gap down. But this fell from 370 down to 338. And it's like, how do I get on board this thing? It looks lower. Well, you get on board with this bull sandwich with a price void. And that's what we gave our subscribers. And actually, we stopped out on the cues on the bounce last week. I think we still might be in it actually with an open $50 gain. But this was a pattern that we saw everywhere last month. So this one, whenever something's not textbook, we just call it minor. So this one we call a minor bear sandwich. The red is in the middle, but you got two big green bars. I know it's moved a lot, but the red bar being ignored was a continuation. This thing rolled over. We put 3 simple moving averages on our charts. The blue is 20, green 50, and 200. So we're in a short and intermediate term downtrend. This was a closing breakdown at the 20 with a bull sandwich with a price void. I mean, that's the takeaway on this. So this is our Telegram alerts we send to our subscribers. We give the date, the symbol, the strategy, the technical setup, stop loss from beginning to end. Bull sandwich breakdown at the 20 MA. There you have it. And as Greg says, the rest of the examples are the same but different. It's the same concepts. It's like playing blackjack. You're using your same skill sets, but you have a different set of circumstances. So the bear meat is in the middle. So Greg, I mean, I don't want to get in, different discussions, but you can see the rising 20, rising 50. You actually made the comment when you were talking about the transition on multiple time frames. On a bigger time frame, folks, and so that's why I don't want to get too complicated here. You can take over. So this pullback on the daily time frame and this bear sandwich was a buyable pullback on the weekly chart.
So moving average discussions that we've had empty lives, the 50 MA is equal to the 10 MA on the weekly. So the weekly trend is up. We can see the current prices. We can see the prior swing low over here, which would be our reference point of major support. So pulling back this far is a bit deep within this time frame. But on the weekly time frame, we know it would just be fine. But we'd like to see, I like to use the word, the repairing of the damage because of the depth of this retracement on the daily time frame. Holding here is what it should do. The higher time frame is still up. So coming back up, remember, everything's about it went down and it came back up again from the bullish point of view. So here was the area that it broke down from. It went down and it retraced 100% on this bar. That's good. Right? Could be a bottoming tail bar, could be a bullish 180, depending on how we compress the information. So now on the red bar, what thought does that produce? We don't have the green bar yet. So every bar creates a thought. And so, well, to me, I see that I'm a bit conflicted, and I'll tell you why. This is up. The depth of this is rather deep, and it came back up, and that's positive. So ideally, it wouldn't have formed a red bar, but it did move away. So now I'm a little conflicted as to, hey, this could go down and break the low and form some other kind of a pattern. I don't know what's going to happen next, but I'm hopeful it'll be a red bar ignored, because that's the most bullish thing that could happen, is a red bar ignored. So then when it does happen, now I know what's happened. I can put the pieces up together of the retracement, the uptrend, the bear sandwich, and all of that says, hey, buy it above the high and see what'll happen.
And, here's another one. And we purposely, they're not all not going to be textbook, but using our approach, bar by bar analysis, you're able to read the messages of it. So this broke out, made a new high, red bar. So as Greg said, I'm back to, all right, I'm questionable again, but I'm still in an uptrend. Didn't take out the prior bar's low. And now I got a bullish retracement inside bar, and I'm back to my to my bullish bias on the bigger time frame. All right, so wow, so Greg, I mean, how do you interpret these two things down here? Wow.
That's what I call a Mr. Schizophrenic pattern.
No, I get it, but in terms of demand supply, it's like
it's a picture of uncertainty, and this is your 200 MA, which means the monthly is still up. It's at support.
Yep.
It's all crazy. It breaks down into this area. So at that point, I'm like, maybe it'll keep going lower, but I see multiple time frames are, out of alignment here. This has been going down for a while. And for the 200 to be over here, that means somewhere over here, it had to be in a strong uptrend. Not that the 200 was like that, but what am I looking at here, Dan? This is weird what you have here. Oh, I see. I drew that over here as that red thing. I should change this to blue, not to get confused. So, here it was downtrending. Your 20 is down and the 20 is below the 50. So it's down on the weekly time frame. It's down on the daily time frame. It's still up to sideways on the monthly time frame, and it's at support. So I'm not doing anything with this. It spikes down. I need something else to happen. It goes back up again. So now I'm thinking, hey, if this can go sideways here, then it's a buy. Then the crazy thing goes right back down again. And I'm like, what the hell? So now I'm telling you exactly what I would be thinking at that point. Sellers are in control. I know it's at support. It can't go up. Give me a 1, 2, 3 pattern or something like that to short it.
Without a doubt.
And then the crazy thing goes back up again. And it's like, all right, they made me crazy. They did a hell of a good job, but now I got it, and it's like, now's where your money management really comes into play, because something like this has really got to shake your confidence. I mean,
but after the second one, that's telling me it ain't going down. So
it's super compelling, but
we would sell a put spread at over the high of the green bars. Like, this ain't going. I got 2 180 reversals.
So let's tell them the thinking here. See, Dan and I, we're master trader. We're not the same brain in a sense. Dan's mind says put spread because that is pretty much a no-brainer. My mind automatically always thinks directional because you make more money. But Dan makes money if it doesn't move. So you can see how it popped up here, and he's pretty much going to be at full profit in a couple of days. Whereas, I'm sitting with this thing that's like, not going nowhere. But, and something like this might actually stop me out. It depends on what's happening. But now you just got a new pattern, and
downside shakeout. Yep.
Yeah, downside shakeout, which is a great pattern. And now, this whole bottoming process that's gone on here.
Yep, massive, big.
It should make a hell of a move.
Agree. Yeah, that's a beautiful bottoming pattern. We got a beautiful multi-month bottoming pattern right there. Oh, went the wrong way. So here I call these opposing sandwiches, and so let's explain that. So I have big green, and my bear meat in the middle. So that over the high suggests higher prices, but don't ever forget. So I have big green, and my bear meat in the middle. So that over the high suggests higher prices,
but don't.
You hear that?
Yes. So I have big green, and my bare meats in the middle. So that over the high suggests higher prices.
You're turning it off.
Yes. So I have big green, and my bare
You
meat.
hear that, or is it just me?
So that.
All right, thanks. All right, so again, our other concepts that we had on the first slide was a bear sandwich continuation pattern. We don't want to take those that this thing has run already, $5 in an hour or two, and is far from the 20 at resistance. So this identical setup that was down here near the breakout would have substantially different odds than way up here as a continuation pattern that's in the stratosphere. So even though you might say, all right, well, Dan, you just taught me, bear sandwich, I bought over the high and look what happened. Now it's slammed right in my face. And it's because of what I'm telling you right now, the location after a multiple bar move. So now we have these opposing sandwiches. Now this bear sandwich the very next bar turned out to be a bull sandwich. And I have a price void. So that is definitely a short-term top for the day. Whether I short it or not, I might drop down to a smaller time frame. These are 15-minute bars. And sure, I might have a day trade short. This thing down a lot, prior low, nasty red bar here on volume. We had MT live recently after the multiple bars down on volume, near support. That's saying a low should be near. Look at all these inside bars. This green bar was a closing breakout. I could see people buying the next day over the high. Then they went home totally mad, probably stopped out. The very next day, took out the low, wide range engulfing, price void, there you go. So this sandwich, you see the conversation I just had about the location of the sandwich? This location of this sandwich is from consolidation after a climactic buy setup with a price void. So this one has significantly more odds than that prior one. Another example here. This was a month or two ago, VIAC, the sector just got killed. Look at this, $100 down to 42. I mean, do you remember these, Greg? The sector, I don't know what fundamentally was going on. This thing got cut in half in a week. Climactic buy setup, here's my volume. So now we just drop down to a smaller time frame, and we will be buying you. It's just a matter of what day and what pattern. But I'll either be buying you, or you see in this case, it's one of these put spreads. And because volatility is skyrocketing with the fear of this thing collapsing. You see the little scared trader here. Climactic buy setup on volume at the 200 MA. So let's say this thing was at $45. We went $10 lower, and we sold a put saying, yeah, I'll buy VIAC at $35.
How does it even exist anymore?
Well, it's not bankrupt, so it might have merged or something, but VIAC. Yeah, so it was getting merged with somebody. I forget. Sam here is saying it's Para. P-A-R-A. All right.
Global. Okay.
All right. I don't know the history, but we drilled down. This is what we call drilling down to try to get in on the tail. So Greg, why don't you explain that intraday time frame, getting in on the turn, the transition. And we got beautiful sandwiches here that got us in near the bottoming tail.
That's a heart attack for me anyway on a 5-minute chart.
Well,
but, I mean, something like this, but I know what you're saying. It's like, so this is an example of what I would say it's easier said than done. Meaning, okay,
Well, that's why we went $10 lower.
yeah. So this low here, if this is where this is, what you're saying is I'm looking over to the left, and if the 200 MA is aligned with that, and you see this climactic move, you're getting ready. Down at that low point there, buyers are going to step up, and there's going to be some short covering on something that's moved down like this, because they all know where the support is. As much as they have their fib lines and trend lines and all the other stuff, they know what's over there to the left. And so you then look for your confirmation pattern. And this bar, while it's a bottoming tail bar, it's also what we call a range expansion bar. Same with these bars as a signal, as a continuation pattern. You want to see the range expansion, because that tells you that this became climactic. You can see this is getting climactic, but as this is going down, right, this is starting the move. And then it's like, oh, maybe it'll go back up, and it stabilizes, and then it goes back. Oh, maybe it'll go back up again, and then down again. Maybe it'll go back up. And now you've got the biggest range bar in the move since it started the way down. And they threw in the towel, and then it turned. So you've got a very powerful combination of concepts and information coming together from a higher time frame, and then this lower time frame, and then the candlestick patterns as explained. And then, this is like, I know that, this, looking at this, it's not time to raise your stop when you see this, but it's certainly making you think this trade isn't going to work. And that's what's easier said than done, because, these bars, the size of them, where you're like, oh, you got a nice profit. Oh, it's gone. Oh, you got it again. Well, now it's gone again. Now, and so on. And, probably this is the most powerful bar that communicates the end of the crazy, because it took out that low, and it's a range expansion bar.
Well, and Greg explained to them that's not a textbook bull sandwich, but it could have been, depending on the clock of that 5-minute bar.
Well, look, what we really want here is a situation. Let me just move this thing out of the way here. First of all, this, let's just call it cleaning up the mess, because that's a mess. This is going down, everybody's bearish, and now it's like, maybe it'll keep going down, but what's going on over here is a powerful piece of information that suggests it's not going to. Now, if I can draw this out, so you give you an textbook example of what we would want, would be, see that topping tail bar? Of course you do. No follow through. And then you get something like this. And now we get the sandwich. So now it's like, oh, damn, it's going to pull back. And maybe it goes under a little bit, but it does something like that. So maybe be a little bigger just to make the point. But that's your continuation. All of this that occurred. So while we're talking about an individual continuation pattern here, can you see how there are so many other things that come together that increases the probability of this picture? See, it's not just about that picture. It's about you understanding that we're teaching you this picture in relation to all of this.
Right. That's
what makes what we're communicating to you and sharing with you so powerful. It's not that, oh, here's this bottoming tail bar and it's, such a great thing and so on. That is kind of, you typically get this marketing stuff on a lot of webinars that they try and convince you that, look, all you need to do is see that bar aligned with their proprietary moving average or Ichikumi cloud and, whatever. You've all been there. But as you put this information together, and here we're reading this is a picture of uncertainty, but it's just happening at a location and after something that occurred that is, they're thinking it's bottoming out. They are. But it's whipping around. And now notice how the bodies become tighter. This is where everybody's starting to come together. This thing's not going to continue down. And then you wait for your pattern to show up.
We can go through a couple of these faster. Here's another one, FDM. We gave to our ETF trader, which is longer holding periods of ETFs because the weekly and monthly suggest a big price void. And this was our continuation pattern, just similar to the cues that I showed you earlier. We found these things everywhere. It was bull sandwich heaven for this time period. Just go back to mid-April last week. Where did FDM go? It's now 131. And we got in this thing, Greg, at 175. So, but again, it's not, don't say, oh, I get this new pattern, I'm going to go be a millionaire. You got to apply the other concepts that we're talking about. And this was a very powerful continuation within downtrend with a price void on the daily and weekly charts. But come see us in the green room. This is our live trading room where you're interacting with Greg and me throughout the day, starting 9 a.m. pre-market review, open trades, our hit lists, our gaps, and we're interacting with members all day long, scanning, answering questions. Spend $7, spend a week with us, and you will see us, walk the talk, as they say. I mean, hopefully you're learning a lot on every one of these MT lives, but you'll hear us talking about these in real time. And as Greg said earlier, hit the button. Here, we're verbally giving you all the reasons to hit the button at whatever time that it sets up intraday. So a couple more examples here. We can go through a lot quicker, and we'll look at the real markets and answer questions as we always do. But I'm purposely not saying anything here. They should jump out at you. So Greg just helped you right there. Look at the moving averages. Look at the bearish consolidation. It can't bounce. And then Greg just circled the two keys. The second one being the no-brainer bull sandwich breakdown.
And I pointed out that what I was pointing out there, Dan, was that while this could be considered a bull sandwich, it was still within the range. So a continuation pattern means the move already started. So the red bar already poked down, and then the green bar was even bigger. And so by being followed by the red bar down, that means that sellers just jumped all over it. And this picture should reinforce for you how a green bar within a downtrend at resistance or supply should be discounted as a bullish bar. And of course, you need confirmation of that. There are times where this thing could poke back up through that resistance, and then we'd be thinking something else. But once you got the confirmation, press the button.
Right, and the sandwich is the confirmation. So another weekly chart. Here you go, price void, downtrend, and then other concepts, greater than 100% retracement, nice bullish controlled multi-week consolidation. Now I'm saying this is not how we define a sandwich, but it just throw it in the category of so what? It's the other concepts that tell me this was a little breakdown failure, bullish engulfing at the rising 20, flat 50, greater than 100% retracement, price void, you buy over the high of this bullish engulfing bar. Not a sandwich, but not, everything I just said. This was a bull sandwich breakdown. So here, bull sandwich here, breakdown, price void, no brainer. I get 2 green bars ignored here, closing breakdown. This is the price void. As we said, it means look to the left, and there's, because of the momentum move, there's insignificant support. So I have 2 big green bars ignored. I have declining 2050. I have a bull sandwich, short the low.
So the void is just these multiple bars moving up. It's a daily chart, which you can see here. But each day it just opened up, like everything just resumed from the prior day, and it kept going. So there was a little support here, but now you've even got this breakout that winds up failing. And of course, that becomes bearish. And then it consolidated at this congestion area. So once this pattern begins to form, and we assume it completes itself once it breaks this low, even though it popped back up again, that's just, who knows on any given day why things do what they do. But once that breaks, the assumption is that it should keep going down because there's nothing to the left.
Uptrend, just the opposite of what we just looked at. A beautiful closing breakout. Uh-oh, what's going on? Deep retracement. Is it a breakout failure? Nope, I got a 180 reversal. Now notice I'm giving you examples. They're not textbook engulfing, bear sandwich here, because this is a higher low, but the message is the same. That's what it's all about. It's a closing breakout. So whether this green bar traded under this red bar's low or not, who cares? It's a bullish close and an uptrend. This one, deep retracement. This one's a monthly time frame. So Greg, actually next week we're going to be talking about trading bear market bounces. This actually is a good example of one. Whatever this is,
It bounces by next week.
well, but this is a good example, because look, it went from 85 bucks down to 42, so it's cut in half in 2 months. So we're waiting for the turn. And this turn occurred in the middle of nowhere. It wasn't on major support or anything, but this red bar ignored, bullish engulfing, price void. There's my turn for a bear market bounce on whatever stock this is. Good example. Red bar ignored, breakout. This one looks similar to another one we talked
Go
about.
back to that one second, because Sam had asked a question about, does it have to be near the 20? So it should never be really, really far from the 20, but it doesn't have to be touching the 20. Sometimes you'll get it where it will touch that. If it was consolidating a bit and it just started to move, like we looked at one a little while ago, it could touch it, but it doesn't have to touch it. Now, this one's a little farther away. That's really not a big deal, because you want some kind of a powerful move. If you don't have any kind of power move whatsoever, it can't get away from the 20. So it's okay. But if you were to get one here, be a little more questionable. It all comes down to what's over there to the left. So sometimes things can continue with continuation patterns for a while.
All right, so I wanted to show you this one 5-minute chart. So this was beautiful. In our 3 advisory letters, we swing in 4 trades, stocks and options. We don't day trade, but we do in the green room, obviously. And this was one that we traded. So big, beautiful move up. How am I going to get on board this thing? This dotted line is the new market day, and it ripped. It's climactic now. What am I going to do? But assuming the bigger time frames had a beautiful price void, and I wanted to get on board this thing, we put it in a 5-minute chart. We call them thumbnails. Greg and I have 6 screens. I think Greg has 8, and it just allows us to monitor a lot of things. So this thing pulled in, back up, red bar. It's like, I don't have any confidence yet. Now I have a bear sandwich with a bullish 1, 2, 3 continuation, which means big fat green bar, inside bar that stays in the upper third, price void. As I said, I'm assuming the other time frames were bullish. This is the absolute no-brainer location to get on board this stock. You got a bear sandwich with a 1, 2, 3 continuation.
Good one.
Beauty. All right, so Greg, this is the last one. Why don't you discuss, Greg, why shorting, because this is a bull sandwich, which suggests shorting under these lows. And it's back to the concept of, okay, where is this picture? So why would this be a very poor short?
It's extremely erratic. The 200 doesn't bother me so much, but this big bottoming tail bar over here, which is a range expansion bar, is a concern.
Correct.
So,
and it's far from the 20.
So what you do in a situation like this is you go to the weekly time frame. When anytime you look at a price pattern in the time frame you're looking at that is so erratic it becomes confusing, you look at the higher time frame. So we'd go to the weekly and compress this and see if it makes more sense. Sometimes it doesn't, sometimes it doesn't. So this obviously got climactic and it was a breakout failure. This retest would have been a good place for a short because of the break. And so now that it's here, you could short it here. It's just, you're going to need a big stop. Right? It's probably above this high and just to see if it can get started, but I'd probably go look elsewhere. But if you said you got to do it, I'm just going to give it a whole heck out of room and put on a small position and see what happens.
All right. So Greg, just to pat yourself on the back, this is actually the spiders a couple years ago. And you discussed in the weekend letter, this was Friday. And you said, danger, 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 Will Robinson. We're on the verge of a possible breakout failure. That you said the monthly charts are in the stratosphere. The internals were crazy bearish because all market participants were too bullish. And that's what started this. You warned the subscribers the exact day.
Yeah, that was a good call.
Right. All right. So Greg is, I think, going to post the special. I think he already did that we have going on here.
Yeah, so that's, if you're just interested in the swing trading course, fantastic. If you're interested in that special that I posted, which I said we only do that usually at Christmas time, but Dan insisted that we did it now.
Exactly. It's Memorial Day.
So we did it, but you can get the swing trading course for half price. Like if you just wanted the MTS course, there's an add-on there where you can just get it. You can get it for half the price, which is a great deal. So the MTS course comes with the full position and money management course. It comes with the full gap course. It's an amazing deal. With all of those courses combined into the MTS course. And so consider it. And, the full options course. And I'm not sure on that options thing, Dan, if someone just purchased your full options course, I don't know if they get a discount on. No. Oh, that comes with each one of those deals come with a month free of the green room. But if anybody purchases the full options course, if that's what you're interested in, and then you want the directional course or Dan's advanced money,
Master credit spreads.
yeah, just email Dan or I and we'll give that to you half price.
Awesome.
Because it's not on there, the checkout, but if you want that at half price, just let us know and we'll do it. All right, let's look at a few charts.
Yeah, we're running a little late here, but yeah, I mentioned to Sam, Greg, just this morning, Home Depot had a 15-minute bear sandwich with the daily confirming it. So, we'll answer your questions, folks, if you see anything. But if you want to show them 15-minute Home Depot, look at that bear sandwich, exactly out of today's topic, with a gap reversal and the daily is supporting it.
Yeah. Usually we look for these where this bar is about the same size as the others, but we don't always get it exactly as the textbook, but that's the idea.
Yeah,
Know that it came down hard. And let me show you something.
agree, Sam. It is kind of more like a 1, 2, 3, but yeah, good point.
Let's mark that bar and look at a 5-minute, see if it marks it. Okay, so there's your 1, 2, 3.
Yep.
All right, on that bar. So I guess this is part of the deep retracement.
And the pullback is the red bar. Exactly.
Yeah. And so, you can see how it held. This is your, who's this here? Your little support area right there. And you get this whip back and forth there. But, with the thing trending up like that, you shouldn't think sell short. Oh, it's going to go down. If it does, whatever, but it just go with the trend. It just puts the odds more in your favor. All right. What else could we look at here?
Yeah, I mean, anything you all want to look at?
Generally, the markets and a lot of stuff over the last week or two have been you see all these overlapping bars. This is home improvement that we're looking at, but like this was kind of crazy today. That's really in the middle of nowhere. Why I had that horizontal line there, I am not sure from the past because there's nothing there. But this DKS came out today.
It probably percent wise would be my guess, Greg.
I don't know, Dan, but I mean, this thing gapped down today and rallied off of that. It didn't quite get here, but now you've got all of these retailers which just look like garbage. I don't know why GME isn't a retailer, but I mean, if you look at these on 5-minute charts, they're pulling back now. A lot of them, that's not pulling back, but so many of them did this morning. Look, like all this junk just ripped to the upside on that gap down reversal.
No.
Sometimes markets do crazy stuff. I know what in the moment I can't explain it other than a short covering. I don't know. There's so many bearish things, interest rates going up, inflation, nut job behind the wheel, oil, but, and then you have something like this and there's no continuation pattern. So if you use the 5-minute, like I do primarily, I could go down to a 2-minute in the morning, but there's nothing here. There's no continuation. It's like institutions came in and it was like 1999 on the 5-minute chart. A 2-minute, there's no sandwiches. I mean, it's just phenomenal, buying, hand over hand buying, for whatever reason. I don't have the answer right now, but it's a pretty powerful reversal. And looking at, the retailers, which is just god awful ugly chart on the weekly of a breakout from almost a year-long consolidation and then a failure. I wouldn't trust it that it's going to hold here. You would think it's here. So I don't know. We'll have to see how it plays out. It could be the start of a bottoming process. But bottoming patterns typically have decent sized rallies and they fail miserably again. And that's what they do as they start to bottom. So I would not think that this is the start of anything of great significance just yet. All right. I hope you enjoyed this. I mean, we covered a lot of stuff today, as we always do in MEMT Live. You can go to education on the website, the navigation, and at the bottom, you can sign up for future MT Lives there. And we'll be back next Wednesday.
Trading on.
Thank you for listening to Master Trader Live. If you liked the show, we invite you to share this video on your timeline or tag a friend who wants to learn stock market tips. Stay educated with our free chart of the week, a weekly analysis or lesson sent right to your inbox. We're live every week, and you can subscribe to the channel and press the bell to get alerts. If you've enjoyed the event, please give us a thumbs up. Just visit mastertrader.com. That's mastertrader.com.